Seeing a little bit of firmer grain market here across the board. What's going on?
Well, I think we're seeing more than anything some technical buying action in the grains. Possibly there's a double bottom on corn at 434 in the December contract. That's attracted a little bit of short covering. It seems like maybe we've taken a lot of this weather premium out as we start into June, and longer term forecasts usually do add some heat into the summer. Just feels like maybe the risk to reward has kind of shifted at this point in time, where we've weighed on values through Memorial Day, taken a lot of weather premium out of the new crop corn and bean values. Now at these price levels, maybe we're going to have some sort of a small rally before we turn back lower and make our summer highs. So that's what it appears like. There's not really anything fundamental to hang your hat on that says that we put a bottom in and we should go sharply higher. It's more of a technical bounce at this stage of the game than anything, because weather still looks good, and that's the number one thing that would need to happen to drive us sharply higher is adverse weather.
Okay, yeah, like you said, no weather premium in this market, so to speak.
Yeah, exactly. Things just got, too cheap. We saw that in the wheat market where it seemingly bottomed around the $5 mark. Maybe that was a little too cheap considering that we still had a lot of growing season left, and now we've rallied July back in the 540 range. It feels that way with corn at 434, a double bottom for sure, and an area that maybe considered too cheap by the trade. Same thing with soybeans in that 10, 15, 17 area. November beans there, again, too cheap compared to the growing season that we have in front of us. Now, if we go through this growing season without any hiccups, we're going to take those lows out and go sharply lower. But we have, probably some hotter weather ahead of us that could cause maybe some small issues. But right now, everybody's reporting, good start to the growing season, maybe not quite as good as a year ago.
Okay. How about livestock? What's happening there?
Wow, we saw a lot of technical weakness yesterday in that cattle market, but it was based on some rumors that we've been hearing previously. We haven't heard any fresh rumors, but about a plant closing, and we've heard talk about that may happen here for quite some time, and there may be some new plants coming along. But right now, it just doesn't feel like there's anything really stopping this market from a fundamental standpoint. Cash trade expect to be stronger. Cutouts still holding in there. They were mixed at midday, but still holding in there, even though we're increasing slaughter just a little bit. But sure feels like these futures are too discount to the cash markets. I think from October to the current cash, that's a record discount, and we need to narrow that spread up. And I think that's the job of the futures market here this summer, is to narrow that spread between the cash and the futures, as we're not rebuilding that herd inventory anytime soon.
Okay. Anything else we should be aware of?
Hog market surprisingly has moved to some new highs. We're seeing August once again pushing to new highs here. And that comes, as I say, a surprise, because without an agreement with China to buy U.S. pork or other egg products, it's a surprise that futures would just be shooting higher. But it seems like the funds are stepping in and buying this market. The technical trend started to change in mid-April, and that has ushered in a lot of buying, especially from the fund traders, despite one of our key export customers having a tariff issue with us.
Sure. Very good. Appreciate it, Brian. Thank you much.